Hello guys, welcome. Today I will bring you a new video. It will be a video about psychology or specific trading psychology, because psychology is just, I think it's the most important thing in trading, and it's mostly talking. It will record a screen of TradingView, but probably I won't use it. Maybe if something comes to mind I will use it, but I don't think so. Now, what is trading psychology? Now, it's actually pretty easy. We want basically our psychology to be good and healthy, because it basically three things: fear, greed, and hope. Basically, when you enter a trade, we can maybe fear of missing out, be greedy, or hope, or maybe even regret. That also happens from time to time. What's basically the best thing to do? Now, basically, I gave you guys like three trading plans, strategies, whatever you want to call it. Basically, what I want is that you start with using those, or at least know all the ins and outs. Most of the time, when your trading psychology is going to mess up is if you maybe switch with multiple strategies. Like I can switch, but I can switch between strategies because I already do this for like 11 years, almost 9 years profitable, and the strategies I'm talking about I know, so I can hop between strategies, but the strategies I already are not really master, but I did them before and I know them well enough to actually use. So for example, now we have the London breakout. The London breakout is new for me. Someone told me a kind of similar strategy on the 2 minutes, but I'm using it on the 5 minutes. We have the daily liquidity grab and the session sweeps. So basically what you can do is choose one of the three strategies. How I explain them to you guys, they work, but what's important, make them your own. It's especially important that for example, if we look at the daily liquidity, you basically want a daily liquidity to get swept. Like I don't care if you add things to the strategy or maybe leave some things out, but the strategy in a basis is like, that's basically it works. You can use moving average, you can use the RSI, you can use MACD, I don't care, just add whatever you want, but the basic strategy already works. It has about 50% win rate, and it probably will keep like that. It works for over 9 years. I backtested it till I do it for 11 years, so that's since 2014, and I backtested it I think since 2008, 2007, I have no idea, but it's a long time ago. Like what's really important in trading, you basically want your setup come to you. So for example, now I can use the chart, that's actually nice. For example, if we look at the chart here, we see it's a bit sideways. It made the new high, also made some new lows. So if we look at it and we see this, most of the time because it goes sideways, the next move is down. So what I would do here is I will look for sells, but we're going to use the daily liquidity strategy for this. If we see, this was Saturday, and if we zoom in, we see this is our daily high. So basically what we want is a sweep coming down. Now for the people who traded this with a zone, there is no zone, so they probably won't trade this, or maybe you don't care if the zone is touched already, so you can trade this. But this is basically our entry, or this is our site to look at. But it's still not valid, because what's our setup? We want to break a low. These are equal lows. So it's still not valid. So what do we want to see? We want a break of structure, go up. It never goes up in one way, or in one line, or in one move, but this is fine. It comes down, and it probably will go down. But for example, you're not an aggressive trader, so what can you do as well? You can basically add a extra confirmation. So the trade makes a break of structure, it goes up, it comes down. So maybe there is like a market shift on the 5 or the 10 or the 15 minutes. Then you wait to retest the market shift and you go down. This is also a basic entry. If you are an aggressive trader like me, you basically go for the engulfing candle in your way. So in this particular trade, it would be a black candle. And if you're maybe a more passive trader, you wait for the confirmation. So basically, if you see this, if you look next to it, then it will be more like this. This is your. I have to draw it again. Like if this is the movement, it goes up, it comes down, and it goes up, it comes down, it breaks, it sweeps, it comes down. This is your break of structure. You want to retest it. Maybe you can put stop loss high or maybe above here. And then you target 1 and 3, the lows of the Asia session, the lows of the London session, New York, whatever you want. That doesn't matter. But it's important that you want the trade to come to you. You don't want to greet the trade. So like you missed one, you just don't take it. If you see it happening, but you're busy with something else, with school, with work, whatever, just don't look at it. It doesn't matter. It's okay if you miss something. It's just part of trading. Also, there is like a emotional cycle when you enter. Normally, when you enter, you have like hope. So you enter and you're like, yes, I'm going in. Finally, I found something. So that's 1 of the 5. Then you have 2. It's like euphoria when price goes in your way. So you're happy. Yes, I'm making some money. I'm happy. And then you have step 3. The fear comes in because it makes a little retracement, or it almost hits your TP and then comes back, or it almost hits your stop loss and then it crashes. So you have basically step 4. You panic from, wow, what am I going to do? And maybe you panic, then you exit, and then you have 5, the regret. Basically what you want is like you minimize those steps. You don't want it to be 5 steps. You basically want it plays out your setup, you enter. So entering is step 1. Then basically you close TradingView, or you don't look at it, you don't care, you just let it happen. And then it hits or your TP or stop loss. That's basically step 2. And then step 3 is you analyze it. So then you're going to look, is it a good trade? Was it a bad trade? Could I do better? So if it was a good trade, then yeah, shit happens. A strategy is never 100%. It's most of the times, if you have like a 1 in 5 RR, most of the times it's between 20 and 30% win rate. If you have a 1 to 3 RR, it's like a 40 and 50% win rate. If you have a 1 and 2, it's most of the times a 60 to 70% win rate. Like it depends on your RR. But what can you do to actually start to mastering your trading psychology? It's not that hard. Basically what you want to do is having a trading plan, having a risk management, and journal your trades. That's basically it. Of course, you can do some extra things like reading books about mindfulness and discipline. When you don't feel trading, don't trade, because trading, you will see when you're feeling well, when you're doing good, you trade well. When you're feeling down and you're sad all the time, you see trading doesn't do well. So then you can better take a break for a week and then come back, look at it again, and then do it all over. But what's important with having a trading plan, like basically in the Discord chat, I give you 3 examples of a trading plan. But a trading plan is like a checkbox, or like a step. Or how do you explain it, man? It's like multiple checkboxes that you can check whenever a trade is happening. Like with the daily liquidity sweep, it's like, did it make a break of structure before it swept the daily liquidity? So did it break the structure? Yes. So now we'll look at the daily liquidity. Did it sweep the daily liquidity? Yes. Did it wick the daily liquidity, or did it go in and out like a maximum of 2 candles? Yes. No, it's still valid. Then you look if is it a valid entry or whatever. So that's basically what you do. It's basically a guide. It guides you to enter a trade. And the journals are very important, because you want to look at the trades after you took those trades. So even I do journal, but what I normally do, I don't journal like what I did earlier in the days. I just leave my trades on the chart, and just on the end of the week, like for example today is Saturday that I record this, I already look back at my trades and I was like, is this a good trade? So this is for the London breakout. Is this a good trade? Did I follow my rules? Yes. Stop loss underneath, didn't hit TP, hit my stop loss, it's fine. Here, this is nothing. This was I have no idea what it was, but this is nothing, because I only took 1 trade and it was a loss. This one I stepped out. The reason why was it broke. I will put on my sessions. It broke the session high, it closed above, but after the 1 in 3 it didn't step me out of the trade, because Maven is a fucked up broker or a fucked up prop firm, so it didn't step me out. And I basically stepped out and at a 1 in 1, so like here. But I followed my rules, I did everything right. So sometimes you're just unlucky, that also happens. But yeah, why are like the pro traders, like why are they consistent making money? It's actually really simple. They just follow their plan. They are not cocky by trading more than they need to. They don't overtrade. Most of the time they trade less and earn more than actually trade more. Because when you trade more, you start overtrading. Then it's like more like gambling. It doesn't work like that. Like in my experience, if I look how I started trading, I got into trading. I actually never told this. I think I started trading by a friend that I knew at the time. He was already rich, but that doesn't matter. He traded basically gold and oil. And he was like, yeah, you have to learn this. And I was asking him multiple times, yeah, it's interesting. Can you learn it? Or can you at least try to explain it now? He actually never did, but it always stick to my mind. Like I was at that time searching on YouTube, big traders, and on Google and whatever. I was looking at traders and I saw the potential, the freedom it could bring me. And I was like, I want to do this. So I started learning. But in the beginning, of course, I started with YouTube. Really quickly, I realized YouTube isn't going to help me. So I started reading books. And why reading books? Books are not getting published if it's bullshit. If a book is bullshit, it will not sell. And I don't know this for sure, but I think if a book sells bullshit with trading or with real life advice, or it's not really advice, but with real life things, for example trading, they can sue your ass. So most of the times they will not sell things that are not true. Maybe at least the books that I actually read it are really good books. What you can do to find books is basically just look on the internet. If you want to learn more about supply and demand, search for supply and demand ebooks. Just download them. You will get a PDF, read them, go to the next. But at that time, I was like 1 year into trading, and I was constantly strategy hopping. I did go from support and resistance to supply and demand to structure breaks. Like, I was all over the place until I was looking one day at the chart. I was looking at the daily chart, like exactly like this. I was like, what do I see? Do I see something special? And what I saw, it wicked candles and it did go the other way. So I was like, I have to build something with this, or I have to at least to do something with this. And that is how I, after 1.5 years, find that something. But then you have to make a strategy around this. So I was looking at YouTube. I didn't find anything useful about daily sweeps, or I even searched for a daily liquidity strategies, all those kind of things. I couldn't find anything. So I was like, yeah, fuck it, then I have to make it my own. So then I was going on Baby Pips and on TradingView and some other websites, look to just basic trading plans and just start making it my own. I bought the TradingView Pro and I start backtesting. Backtesting is really important, by the way. The more you backtest, the easier it is. It's like basically how I see earning money is like you work for a boss or for a company, and you spend time, and the time earns you money. And with a side job or how do you call it, like trading, I see it exactly the same. The more you do it, so the more hours you spend, the easier it will get, the more you will earn. In everything what you do, the more time you spend, the easier it gets, the better you will do. It's with all of those things. It's also with trading. So yeah. And if I go further with my story, when I was 3 years into trading, at that time I didn't know what prop firms are. So I basically always traded with my own money. At the time I was working 2 jobs. I worked in a kitchen and I was doing in a Lowe's. They both earned me not a lot of money, but they earned me money to basically trade my own capital. I grew it until like 30k. And yeah, with those profits I basically started building it. Then later, after like 4 or 5 years, I found it out about prop firms. I started using them. I also grew my own company with like private capital from big companies, and that's how I became and keep trading the daily liquidity, stayed profitable by just applying those simple things. Just always do the same thing. Trading is actually very boring. If you can trade, you can trade forever. Most of the times when you find out about a strategy, it's just doing the same thing over and over and over and over again. So it will get easier with the time. So hopefully this is helpful, and I will see you guys the next time.